Hello guys, how's everybody doing? Okay, now we are continuing with the recap from the previous week. The entries that were taken from the previous week. Clearly, we had a closure on this area, a kind of closure on the weekly. And also we saw how the entries in terms of the 4 hours were actually taken. We had a sale on this particular area right here. The market came down to discuss it, but also I spoke something about the deviator, though I want to go deeper on these concepts, but clearly we have 3 rules of trading this deviator. We can actually trade it based on the first agglomeration, the second agglomeration, but also we are going to trade it even also on the fourth agglomeration. It's just a matter of looking on what criteria the market has offered at the moment. I won't disclose the first or the fourth, but clearly if I come to the 30, for those who know the fourth agglomeration, the second, they will know what to do on this area. But speaking of the second agglomeration, we had a shift on this point right here, and also we had this formation. We had this zone clearly. When trying to measure maybe the amount of risk that we're actually going to take from here, it's almost 12 pips, which is fair enough for us to take the entry. So we'll have taken your entry, your buying entries on this area. That's the entry that we took. And clearly, if you observe, the market went from here to here, almost 747 pips. So we would have used that to capitalize enough in that specific area. But speaking of the directional bias, as long as the 30, let me look at the 1 hour first. Okay, look at the 1 hour, we would have traded this based on the HPS, the FTA based HPS, as I know a lot of students actually understand how these entries are actually taken. But also on the 4 hours time frame, as long as we had a change of perspective, as long as we had a shift on this area, but also we're having a shift again on this area, and also we're having a major shift on this area. We're also having a formation on this criteria right here. We're having a formation on this area of liquidity. So you know what to do. Either any of the rules they're actually going to apply. So that's that. Speaking of another pair that you actually took, this was based on the NZDCAD, and this was the very, very clear pair to take. Very, very clear pair for you to trade. Speaking of the monthly time frame, I am having this as my currently and as my dominant area of liquidity till today, till now. And the purpose of the market to consume this liquidity, it has to create a new low. That means they're going to anticipate our target here, or our final target at the reclaim point, which is this one right here, at the reclaim point. But clearly, you're going to capitalize each and every movement that the market is actually going to make. So considering this area of liquidity, that means for me to come to liquidate this monthly area of liquidity, I was supposed to have a shift on the daily. And when I come to the daily now, I was having a shift, my lowest point, and also I was having 2 inside formations. One of them was a transition-based formation, and also it's not of any of the types, so it's not a must for us to put into our consideration to these ones. But clearly, when looking to this area of liquidity right here, this now supposed to take us back to the monthly area of liquidity. So coming to the 1 hour time frame, I had a clear, this was my validation point, and I had a clear liquidity engineering, which was this one. And also, if I actually extend it, a lot of people understand why I'm extending this line. Yeah, so this was the perfect one. And clearly, measuring the piece from here to here, we had almost 7. And the market later on came and activated this entry, as you can see. The entry was activated, and this now was supposed to take us back to the monthly area of liquidity, of liquidity. So now the market came upward, as you can see here. We didn't have the criteria for us to maybe confirm the liquidity flow. That means we had to use the second agglomeration. And almost the first entry maybe offered almost how many pips? Almost 444. That means now the liquidation process on this area is now over. So we have nothing else to have. But clearly when I observe the shift point, as long as I'm having these highs, this was supposed to be my shift point. But a lot of my students actually know this shift point right here is also an area of liquidity. That means you have to also go to the situation diagram, which is the 1 hour, to observe the shift point before coming to take out this shift. So here we had a lot of activity. We had a lot of movements. We had a lot of shifts. You're having this shift right here. We had this formation. So the market was actually consolidating a lot on these previous, how many of these previous 2 weeks from November here to almost how many, to almost January. The market was consolidating a lot. But clearly, if you observe clearly, that's why I am very selective on when I'm choosing my shifts and also when I'm choosing my pairs. Clearly, we also had a shift after the market created this high right here. We had a shift on this point. And also, we had a continuation of shift on this area. Here, clearly, we had this highest point, we had this closure, this was my continuation of shift. And the market first of all came and activated this entry. Remember, we are waiting for the 1 hour shift so that it can actually take us down to the daily area of good that you actually marked on this area right here. So this was the entry, but the entry actually didn't hold, as you can see, almost 36 pips. But I came and marked this as my area of liquidity. I won't go further to explain more further why, but a lot of students understand why this had to be marked as the area of liquidity. So coming out to the 15 minutes time frame for more refinements, the entry was taken on this clear liquidity engineering right here. Clear. And from here to here, we had almost how many pips as our risk? Almost 7 pips. So you would have taken your entry based on this criteria right there. So now, the main purpose of this sheet is to go to liquidate the daily area of liquidity. So the daily, yeah. So coming maybe to the daily to observe what's actually happening. The purpose of this shift is to go to come and perform a shift on this area. The market on came and performed the shift clearly. That means we had a true shift on the 1 hour. And also the entry offered almost 223 pips. But clearly, as long as already we are having this as our formation and this as our shift, that means the market has to come to do some huge pullbacks so as it can come to liquidate the inside formation. And a lot of times when the market, before it comes to these areas, it may have some allies, some previous area of liquidity allies to the left side, so as it can come to liquidate on these areas. That's why we talk about these derivatives, concepts, and shit. So clearly, the market performed a shift on this area. That means you had this as our inside formation. But clearly, if you took your entry somewhere here and the market sometimes, it's just a matter of psychology, because sometimes you may take your entry at the exact point. For example, something like this. Maybe this day is supposed to be maybe a daily shift or a daily area of liquidity. You had also to have a shift on the 1 hour, so as we can actually come to liquidate these daily formations. But also we had to have a shift again on the 15 minutes time frame here. That means we had to have something like this, or maybe we had to have a shift on this area again. So we're going to liquidate the 15-minute shift, then after we're going to liquidate the 1 hour shift. But doing that now, if you took your entry based on here, you don't have to be afraid. You just have to wait. Even if the market may come somewhere and even to your exact point, you just have to be emotionally free, because these markets don't need people with a lot of emotional people are not actually needed on this industry, because it's very, very tough. It actually needs emotional intelligence, also patience. So clearly on this now, that means as long as I'm inside the monthly area of liquidity, I'm having this as my shift. That means I'm having my second agglomeration. Coming to the 1 hour now for refinement, clearly, if you observe clearly here, the entry was supposed to be taken. If you observe clearly here, first of all, I had a minor liquidity engineering on this area. You would have taken that clearly, as you can see, it actually played out. But the best one was actually located on this area here. A lot of people are going to ask, bro, why didn't you mark this one? It's because clearly we already activated the entry based on this area of liquidity. That's why you had to mark this downward right here. So later on the market came, as you can see, tap, but it's not a must for you to refine like this. It's just we're not finding the snipers entry. We actually finding those pips, so as we can actually make money. So it's better for you to mark the clear liquidity generated to actually, and as you can see, there is almost 8.6 pips. So it's better for you to just mark it. But clearly, due to experience and all that, you're going to mark that as the liquidity engineering. And later on the market came, as you can see, that's the entry that was taken. I actually posted this entry, if you remember, and market went down almost, here was my risk, almost 5 pips. And the market was actually going down. But also I had to take some sort of re-entry, as long as I actually understand the liquidation process, as long as we have already done the liquidation process on the 15 minutes and also on the 1 hour time frame. Would also use the shifts maybe from the 4 hours time frame. Clearly, we had a shift on this area. This entry was very tricky. We had a highest point, we had a shift, we had this formation right here. And also, we had this formation right here. So as well, I actually marked this formation because, as you can see clearly on the outside formation, the market has already took some entries. So we don't have to mark that inside formation again, as long as it has already been consumed. And clearly on the 4 hours, this was supposed to be my area of liquidity. So now coming to refine on the 30, I had this structure right here. A lot of students understand, if we see something like this, what should we be doing? A lot of them understand well. But clearly when you go to the 5 now, we took entry based on the liquidity flips. Considering, actually here we are having a lot of liquidity flips. This is the liquidity flip. This is the liquidity flip right here. So we had a lot, but clearly the liquidity flip that was supposed to be marked, it was this one. Someone may ask why. As you can see here, even if I try to expand my chart anyhow, no one knows what kind of candle this is. This one right here is, because it's neither bullish nor bearish. That means it's the banker block. So whenever you see this candle somewhere, or maybe at the points of interest, you're actually going to take this entry. And now this is supposed to be my entry. As you can see, it played out well when it was previously liquidity engineering. And as you can see, these reactions, we had a lot of reactions on this area. As you can see, a lot of reactions. And also we had this momentum activity. So clearly the market later on came. And if I try to measure in terms of my new furthermost deviation, I was supposed to mark here as my risk. So from here to here, 7 pips. So the entry was activated, as you can see here. This was your entry. So you have taken the re-entry. You have taken the re-entry. So this NZDCAD was very, very the easiest pair for you to trade, the easiest pair for you to take. So we are currently holding these trades. We are currently holding. The first target is supposed to be on the monthly here. Supposed to be on this area right here. But also we had to have a reclaim on this area, so we are going to anticipate the main targets considering those criteria. So we would have taken a lot of pips. Maybe, as you can see, we actually 198, but also the first entry that was actually taken somewhere here. We also had some sort of enough pips for us to capitalize, as you remember, to the entry based on these areas, and the rest was almost also 7 pips. The market is actually continuing to go, and also considering these movements that we actually taken on taking this price up to that particular monthly area of liquidity. Actually, it's a lot of pips, as you can see. It's a lot. So just a matter of practicing and doing a lot of exercises, training your eyes to see this concept. Then after each, everything is going to be clear as usual. Yeah, we had a lot of pips here, as you can see, having these ones. We had this almost 400 and 400, almost 444. We also have this movement right here on the 1 hour shift that we have actually taken on this area before the market came down. So it's just a matter of practicing and all that. Also, considering another pair, I try to look, we are having the GBPUSD. This pair confused a lot of people. And clearly, if you observe clearly here, I was having this particular shift. And also, I was having this as my inside formation. This is my inside formation. But also, I was having a liquidated one behind here, as you can see. But for us to come down to this area, we had to have a shift on the 1 hour time frame. So coming to the 1 hour time frame, I had a shift, which was this. And also, as you can see, a lot of liquidation process was actually happening. Later on, the market came and performed a continuation shift. And if you observe clearly, gold and also these XAUUSD pairs, they usually perform a lot of continuation shifts, a lot of huge impacts. Just a matter of considering them. And clearly, we had a shift on this area, and also we had an inside formation, a clear inside formation. I won't explain further on the liquidity consumption concepts, but this was the area that we actually came in, took these movements right here. So clearly, coming to the 15, we had a clear liquidity engineering, a clear one. And clearly we had this 2.1 pips, but it's better for you to extend it. Sometimes even 4 is better, you know, in terms of slippage, in terms of spread and all that. So it's better for you to mark even 4. It's not too bad. It's just too good for your health. So the market came later on, activated the entry, as you can see, and the market went down. But also, as the market was actually continuing to complete the liquidation process on the 1 hour time frame, as I've actually observed, if you go now to the 4 hours time frame, we are also having an area of liquidity. If I play the price clearly, had a shift. Here was also a shift, but there a lot of these savers actually having some sort of discrepancy. So it's better for you to confirm your formations to your broker, to the MT4. But clearly we had a shift. And also clearly on the HPS, trade this based on the FTA. If you can actually go to backtest it, clearly if you know this concept, we're going to find out the HPS based on the FTA. So clearly, when you come now to this formation, the market performed, or the market gave us this area of liquidity. The master class students know what am I talking about when I actually mark this or highlight these points. So clearly coming to the 30 for refinement, a lot of people are actually confused on how this trade was taken. The trade was taken very simply, considering this as the liquidity engineering. No more refinements on that specific area. No more refinement, but also, no, I won't explain this. Clearly, the market return came and the entry was taken on that specific area, that areas. And currently the market is continuing to go down, and as usual, In terms of risk, usually just mark almost 15 pips as your risk. It's fair enough. The market went down. The purpose of these movements is to go and create the entry here. It was almost 4 pips. Yeah, just trying to make this in the simplest way. So the purpose of these entries is for you to go and take to liquidate the daily area of liquidity. Clearly on the daily, as you can see, the market has actually approached to those areas, as you can see here, but the market tried to reject it. So you're going to find out maybe next week what is going to happen clearly on these areas, so as you can actually know what to do. But also, we're having the USD entry, the USD, and clearly, if you observe this entry, we had a shift, a continuation of shift on the daily time frame. That means we were having this as our formation. A lot of students know the conditions for us not to use the first agglomeration. I won't explain it here, but on the 1 hour time frame, the market later on came and performed a shift. That means we're having a second agglomeration, which is this one. And clearly we had this as our inside formation. This area right here as our inside formation. So let me try to remove this first, as long as you already know that we actually inside the daily area of liquidity. Coming to the 15, this was where the entry was taken. It was just a clear liquidity engineering, no doubt, a clear one. And a lot of savers actually operate differently. A lot of brokers, a lot of liquidity providers operate differently. Some of them may mark this here as 33 pips, but also a lot of are actually going to mark this as 3 pips. And my broker actually marks this as 3 pips, 3.3. Yeah, so that was the entry based on the second agglomeration on the US30. And as long as on the left side, we don't have a clear zone for us to maybe target for us to maybe target our profits or whatever. So we had to do what we call trailing stop clearly. So as you can see here, the market actually went almost 120 with a risk of only 3 pips. But just know how to take your partials, just know how to manage your trades. I won't explain here all of those stuff. Also, we had the EURJPY entry. It was also a second agglomeration. So we're having the weekly area of liquidity, which is this one. That means for you to come down to this area, you just have to go to the 4 hours to find the shifts. I won't explain it clearly deeper, but you would have actually observed, as you can see here, we had the shift, we had this formation, the deleted ones, but also we had this clear formation. So you would have taken this one as your entry, because clearly if you measure from here to here, almost 4 pips. So the market went down. After the market came down now, we know the drill. We know what to look, considering for us to know maybe what time are we going to take this first agglomeration or the second or the fourth or whatever. But clearly the market before confirmation went down almost, as you can see here, almost how many pips? 329. So after the market came inside the weekly area of liquidity, we had to wait for the shift from the 4 hours, which it did actually on this area. And also the market left us with an inside formation, which was this one. So you would have taken your first entry based on this inside formation. Clearly, the outside formation, when you come maybe to the 4, This was the 4-hour area of liquidity. I'll try to illustrate it first. When you come to the 30, I want to explain deep on the issues of liquidity consumption concepts, but clearly the first entry, because these are two entries, the first entry was located on this area right here. So this was your entry, this was your entry, and the risk was almost how many pips here? As you can see here, in terms of liquidity consumption, almost by 5. But even if you don't know maybe the concepts of liquidity consumption, would have taken the entry based on this liquidity engineering, which was also hard to offer you. As you can see here, even by 10 pips, you actually fair enough for you to take the movements, as you can see. But also after the market triggered that first entry, the market later on provided us with another formation, which was this one. I know a lot of people are going to actually understand why I marked this formation and why I chose this one. So coming now to the 30 for more refinements, if you observe clearly, as long as you understand clearly the concepts of liquidity consumption, this was supposed to be my entry, this one. And this was the entry that I actually took, and I posted this entry, if you remember clearly. And the market went rogue. The market went outrageous, and if you can see clearly here, almost, as you can see here, from considering this structure, I had to mark almost somewhere here. 15 pips are actually enough. So as you can see, the market went almost 421 pips before it started to come down again. And the reason behind the market is doing some sort of feedback is that it has already cleared or already closed above the swing point. That means the market has to perform certain pullback so as it can actually find where there's enough liquidity found, so as it can actually continue to create more highs. Yeah, that is all about the EURJPY. And also considering the GBPJPY, it's actually the same case, as long as these pairs are very, very correlated to each other. Coming to the weekly, also we had this area of liquidity. So it's the same thing from those, from the EURJPY. Just minor things are actually different in terms of consumption, in terms of the arrangement of these structures and all that. So coming now to the 4 hours to observe the liquidation process. For us to come down to this weekly, we had to have a shift on the 4 hours here. And clearly the shift has actually happened on this area. And also we had this formation, which we took the first entry. But the market actually saw that the liquidity is not enough. And actually, before continuing, let me make this clear first. I've been getting a lot of questions from people, bro, what type or which area of liquidity is going to work? That's a very, very silly question, bro. How can I know which area is going to work? Clearly, we are having maybe a shift. We're having the inside formation maybe and also the outside, for example. Someone's asking, bro, which one is going to work? Is it the outside formation or is it the inside? Man, these markets are very, very uncertain. No one, and absolutely no one knows which formation is going to work. Let me make that clear for you. We just trade based on probabilities. No one knows which formation is going to, because if clearly someone maybe knew 100% that this formation is going to work, we could have a lot of free traders out there, for sure. But no one knows which formation is exactly going to work. No one knows which one is not going to work. But clearly, these formations, the inside one and also the outside one, have some sort of significances. Because particularly when you're having an inside formation, because previously when the market was actually going up, that means we had some sort of bullish participants on this particular trend, previous trend. But after the market performs a shift on this area, that means we are having new participants. So the inside formation is going to tell you where those participants are actually located. And also the outside formation is going to confirm to us that we are actually now officially on a bearish. So we use both of them. Sometimes the market may come to trigger the outside, and also the market may continue to go. Sometimes the market may come and stop out the outside one, then have to activate the entry on the inside, and also the market can continue to go down. Sometimes the market may come and stop out all of them. And it's not a mistake, it's actually normal. But you just have to stick to your rules. A lot of times, these formations play a lot, as you can see, a lot of times. But it's not always. But considering these rules, if you take 100 trades, you're going to win almost from 80. You're not going to win all of them because the market are uncertain. You don't have the ability to look or to know how much volume is available on this area or on this area. You don't have that power. You don't have those computers. You don't have that power to know. So no one knows how much liquidity available on this area or how much liquidity is available on this area for you to know. Maybe if you take the entry or whatever, we usually trade based on probabilities. For example, after the market performed a shift on this area, the market left us with this outside formation, as you can see here. So if I were to take my entry on this outside formation, and also as you can see, we also had some sort of liquidity consumptions on these previous formations. If I come take the entry based on the 30 on this outside formation, I would have marked this as my liquidity engineering. And I would have been stopped out, as you can see. Almost how many pips? 10. It's fair enough. But clearly, I'm also having another formation, inside formation, which is actually clean, as you can see, and it was this one. And measuring in terms of risk, from here to here only, I'm having 8. And after taking that entry, from here to here, almost 312 pips. 312 pips. But I already lost almost how many pips here? 10. That means I'm having 302 pips as my profit. You have nothing to lose. So no one knows which formation is going to work, which one is not going to work. We just trade based on probabilities and based on the rules. Just have to follow your rules. If something happens, you just use the rules. If you don't see any of the criteria or any of your conference, maybe considering your system, don't take a trade at all. Just follow your rules, period. So clearly, after the market came now and went inside this weekly area of liquidity, the market performed a shift on this particular point right here. And also we had this inside formation. We had this inside formation, marking it by the weekly, by the blue, as long as I usually trade this based on these areas. And as you can see, as long as the regulation process on the 4 hours has already been done, the market usually moves with a lot of momentum activity, as you can see here, because there is nothing to find here. There's not enough liquidity available in this area again. So the market moves just like that. So coming to the 30 for more refinement on this formation, the inside one. This entry was taken based on the 4th agglomeration, but I don't know how to explain this. But maybe coming to the 5 minutes time frame, let me be specific, let me be clear. This was the liquidity engineering that was actually taken. This liquidity engineering right here was the one that was taken, and the entry was found on that particular area, as you can see. Yeah, I don't know how to explain this, but that's that. And we had a risk of almost how many pips? 2. But in normal circumstances, maybe let's try to look at what would have we maybe used for us maybe to take the entry on normal conditions or whatever. I don't know how, for sure. Frankly speaking, I don't know how. But based on the 4th agglomeration and all that, we had to take this as our liquidity engineering. Maybe we would have taken maybe the liquidity flip, one of the types. We'll have marked this one right here. Actually, you would have marked this one as your furthermost deviation. This also you may term it as maybe a round flip or whatever, but that was the entry, and it was taken clearly on those rate engineering, and this was the risk, and it was almost 3 to 2 pips. The market later on came and fed the entry. And as I told you before, the issue of management, some people may find out that maybe the entry has been activated on this area. The market went, let me try to measure first. So the market triggered this entry. The market went almost how many pips? Almost 59 to 60. So people are going to rush, taking their break-evens to these areas. It doesn't work that way, man. You just have to observe. For example, the entry was taken on this area. For us to put a break-even, we have to wait for the market to create at least a new structure. For example, we're having this movement, the market came up, came down, triggered the entry. The market didn't manage to create a new high, as you can see here. So it's not, you don't have to put your break even at that early, bro. You just have to wait for the market to come and even perform a closure on this area first. Then after you're going to, yeah. And as you can see clearly, the market came again for at the exact point, at the exact entry point. So if you will put your break even earlier before the market performs or closed on this previous high, on this previous swing point right here, would have been stopped out. And the market continues to go at that particular direction. So just have to be very, very considerative on that criteria. Don't rush to put your break-evens if we don't have any clear structure, any clear close, any clear closure, considering that previous movement. So that was the entry. The market went up almost how many pips? 492. Yeah. So that was the entry, and clearly we're having a shift as long as already we have to. Do we have any weekly new area of liquidity from the weekly? Yeah, we are having, but I don't recommend trading the 4 hour shift as long as we didn't close above the swing point. Not a must for you to take the entry. It's very, very risky. So that was the GBPJPY. Let us try to look another example. We are having the AUDUSD also, the buying entry. It was also taken based on the second agglomeration. So we had a shift on the daily, which was this one. And also we had this formation. A lot of people actually took this entry. A lot of people DM'd me on this entry. They actually, and I congratulate each and everyone that actually took this entry, because it was very clear, and clearly on the 1 hour time frame, the market after entered to this area, performed a shift, as you can see here. That means we had to trade this based on the second agglomeration, and clearly we had a shift on this area, the 1 hour shift. Also we had this formation, the inside formation. So based on refinement, you would have taken your entry and your stop loss would have been 1 or 2 pips below the furthermost deviation. I usually recommend this to a lot of students because, as you know, the market is very, very uncertain, so as you can see here. But clearly, coming to the 15 minutes time frame, I personally took the entry based on the fourth agglomeration. To be more specifically, I used the liquidity flip from the 5 minutes time frame, which was located on this area. But clearly, if you actually look at it clearly, you would have noticed some sort of things on this liquidity flip, and also nearest to these liquidity flips, but clearly this was the entry. But even if you don't know maybe the first agglomeration or whatever, you would have taken your entry based on this liquidity engineering here, and your stop loss was going to be 1 or 2 pips below the furthermost deviation. As I preach each and every day, as you can see here, almost, as you can see, 3. You just have to put even 4, because you know these brokers, the brokers that you actually have, there's some issues of spread and whatever, but clearly, if you're having a good broker, you're going to the entry here. But clearly the entry was taken based on this liquidity flip. And it was not an only liquidity flip confluence alone. I think a lot of people actually understand if they look at this area clearly, but also even if also they look maybe on the 15, I mean. clearly we would have seen what's actually happening around these areas. A lot of students actually understand. So that was the entry from the AUDUSD, and the market went almost how many pips? 120. That means we're having 1:71. Yeah, so that was very, very nice entry to be taken, be considered. But also, as long as we also coming to the daily, what do we have on the daily? This entry didn't manage to take the price to create more highs, as you can see here. So we just anticipate to see some sort of movements after the market entered again for the second time to this daily area of liquidity. Yeah. So you just have to observe what's actually happening. But clearly, if you observe on the monthly, we're actually on a downtrend as long as we are still having this area of liquidity as the very dominant area of liquidity. That means selling this pair is a very, very good idea as long as we didn't manage to create a new low. So it's just a matter of taking a lot of things into consideration. So that was all about the AUDUSD. Let's also look at the EURAUD, the entry that was actually taken based on also the second agglomeration. Observing this pair clearly to the monthly, if you observe clearly, we had unclear price action because clearly we're having this area of liquidity from the monthly, which we didn't have a structure confirmation, but also we had this area of liquidity also on the monthly again. So it may bring some sort of confusion. But clearly, if you come to the weekly, I was having some sort of liquidity consumption on these areas, but clearly marking to this recent formation, this is where we use the second agglomeration. But selling this pair long term is not a good idea because on monthly time frame, if you observe clearly, this area of liquidity right here is still dominant. So I'll just go back to the weekly now. Considering this as my area of liquidity, also coming to the 4 hours to observe what do we have. Clearly, we had the first agglomeration on this entry. For those who know the first agglomeration, they would have actually taken the entry. But clearly, considering the second agglomeration, I'm also having a shift on this area. And also, I'm having this outside formation, a clear outside formation. So coming to the 30, the entry was taken clearly to the 30 minutes time frame where we had this liquidity engineering. In terms of pips, how many pips? 4 pips. So the entry was activated on that area. A lot of people who know the first agglomeration took the entry, also know the second also took the entry. So yeah, and the market went down almost 190 to 201 pips, as you can see. And we are having some sort of pullbacks for now. So that was the entry taken in terms of second agglomeration. So this week we had a lot of entries from the second agglomeration, very, very many entries based on this second agglomeration. Yeah. So speaking of that, I think that's all for this week. Let us meet on the next week. Stoker signing out.